Why have corporate profits been rising in the last few years? I'm Richard Vague with Tycos. Last week, we looked at U.S. non-financial corporate cash earnings, or put more simply, business net income, expressed as a percent of GDP from 1950 forward. For this, we used the Fed's integrated macroeconomic accounts data, in which the Fed captures and presents the net income by sector on what is, in effect, a cash basis. Note that the Fed refers to this using that highly Gnostic vocabulary that economists often use as net lending and borrowing instead of net income and expense. Presenting this data on a cash basis means that dividends and distributions are treated as an expense and subtracted, even though companies report those items as, quote, below the line, end quote, in their public documents. As we noted last week, these U.S. business earnings have been zero or negative for most of this span, something that might surprise you at first, but it makes sense once you consider that the very purpose of businesses is to convey their earnings to their owners, which primarily happens in the form of dividends and distributions. We further noted that business earnings have been somewhat better from the mid to late 2000s forward. Next, we're going to look at business earnings from 1950 forward on a more conventional basis, as regularly reported by the U.S. Bureau of Economic Analysis, the BEA. In this series, we see income before dividends and distributions, and to a lesser extent, we also see small differences in the treatment of depreciation, net capital investment, and income tax. You can see that on this basis, business net income ranges from 5% to GDP in the 1950s, the 2 to 3% range in the 1980s, and to a much higher 8% more recently. Given that, as you would expect, profits are higher as presented by the BEA since they are before dividends than profits as reported by the Fed. Now let's look at them together. Again, most of the difference is dividends and distributions. But you can see that in one respect, they are similar. Both show improvement starting in that mid to late 2000s period. So today we're going to briefly touch on the reasons corporate earnings have been better lately. First, wages have been declining as a percent of GDP, and though this has been true for decades, it has been especially true in the period from 2008 forward. This phenomenon has attracted a lot of attention, with oceans of ink having been spilled on it. Detractors decry its contribution to rising inequality, and both detractors and defenders attribute most of it to things like outsourcing and automation and hard-nosed staffing and salary management. Clearly, the lower this number is, the more profits are available for owners in the form of dividends, and indeed, dividends have been rising as a percent of GDP since the late 1980s. But again, it has been something that has been especially pronounced in the period after the 2008 crisis. A second, albeit lesser reason that corporate profits have been rising as a percent of GDP, as we touched on last week, is the rise in the government deficit. When the government spends money, it does not disappear. Instead, it largely goes into the checking accounts of households and, to a lesser extent, the checking accounts of businesses. A big component of this rise in the government deficit has been the rise in net social benefits, welfare and the like, as we see when we look at the net social benefits paid as a percent of GDP. The second biggest beneficiary of social benefit programs after the recipients themselves are those businesses that serve low-income constituencies. We can see that here with the rise in those benefits around the same time frame that company profits have improved. When the government spends money on social benefits, some of that stays with businesses serving those constituencies as enhanced profits. The government's too pervasive an actor, and these programs are too large in scope for this not to be true. That's it for this week. Next week, we'll look at the other big factors impacting corporate profits. Thanks.